What's going on, everyone? Dave Ashworth here, and before we dive into this week's video, I want to talk about a couple of updates. First of all, we're going to continue doing these weekly videos. Hopefully you've been getting something out of them. I also write a written version of every video that I talk about, so if you prefer to read, you can also see those. I post them on our website and also on LinkedIn. In addition to that, we're going to be starting a podcast probably in a couple weeks. So we're going to be talking about all things accounting and finance related to running a small business. And in addition to that, every Wednesday at lunchtime, I'm going to be going live on our Facebook page to talk about the topic for the week, but then also any Q&A that you might have, questions related to running the financial side of your business or accounting questions. I'll be taking those as well, so be sure to tune in for that. So let's dive into the topic for this week, and that is 5 ways that you can use the accounting function to grow your business. If you talk to any successful entrepreneur, they'll talk about how the accounting function and the financial side of their business is one of the most important things. And a lot of people look at it as just another expense, but I'm going to talk about 5 ways that you can use the accounting function in your business to help it grow. So the first one is making more informed decisions in your business. So if you're making money, you're going to be in business, and if you're not going to be in business very long. So one of the most important ways to figure out where you're at is to have a strong accounting infrastructure, have a good understanding of what's going on, have information, financial information at your fingertips, so that as you're making your decisions, the day-to-day decisions, but also the big decisions for your business, you're looking at it from a financial standpoint, which is extremely important. The second one is proactive versus reactive. A lot of business owners act on more of a reactive basis where something happens and then they try to do something about it. And from a financial standpoint, an accounting standpoint, a tax standpoint, it is extremely important to be proactive, to do things ahead of time, to see things that are coming. From a tax standpoint, once a transaction happens, typically there's not much you can do to affect the tax implications, so you want to plan ahead. So it's really important that when you're talking about your accounting function, the financials of your business, that you have things in as much real time as you can that will allow you to be more proactive. Number 3 is getting financing for your business. That can be through a loan, that can be raising capital, whatever it might be. If you go out to the market and try to raise some money, one of the first things that they're gonna look at is the financials of your business. And even if you have the greatest business in the world and your financials are super strong, if you don't present that properly, you don't have a strong accounting infrastructure in place to show somebody that, you're going to have a hard time doing any of those activities like raising capital or getting a loan. So it's really important, if you want to continue to grow your business, a lot of times it is through raising capital or getting a loan. You need to have your financials super tight, and your accounting needs to be just really detailed and in place to achieve that growth that you're looking for. Number 4 is future costs. A lot of people don't want to pay those monthly accounting fees to have an accountant in there on a consistent basis. And a lot of times what ends up happening is they think they're saving money over time, and then they get to a point, it could be 2-3 years later, where they realize an event happened. Maybe it is what we just talked about, getting a loan, and they realize that they need financials for the past 3 years, and now someone has to go back and create those, and that is very, very expensive undertaking. So the best way to do it is do it all along. Yes, there's going to be more costs associated with that, but 1, it'll save you money in the long term, most likely, and 2, you're getting the value of having real-time financials, so you can go back to the number 1 that I talked about, make better decisions. And the last thing is a big one. Most people get into business to someday either pass their business down or sell their business. And one of the things that somebody looking for when they're going to buy a business, they're going to look at the financials. And if you don't have a good accounting infrastructure, if you don't have really strong financials in place, they're probably not even going to give you a shot. So it's really important to have these in place well before you're going to sell your business, because once you kind of make that decision to sell, it's almost too late then to go back and try to put all of this in place. You really need to be doing this for a consistent period of time if you want to maximize your profit when you finally do sell your business. So I hope this video was helpful. Bottom line is, if you want to maximize the growth in your business, you need to take your accounting and the financial side of your business very seriously. Thanks for watching, and I'll catch you in the next one.